packed video, guys. Super packed. Like people pay $8,000 to get this kind of information. I'm just telling you guys. I'm not fucking around. But you guys are stupid for paying that much money. I'm just saying. Shout out to Evans, bro. Yo, Evans, why you paid 3,500 for that shit, bro? Oh, anyways, let's get started. So, as we can see, what is price doing here? It's going straight down, right? Bearish momentum. Now, what do we have here? In the 15-minute, we have a higher time, oh my God. We have a higher time frame FVG, okay? This is an advanced breakdown I'm gonna do today. So stick with me here. Price is bearish, right? And also when we look at the 30-minute and the 15-minute, what do we have? We have a higher time frame fair value gap right here, or this displacing candle. So we are assuming that if price is bearish, it's going to come up to this fair value gap and then retrace. Okay, now what do we have second here? Second is that we have 1, 2, 3, 4, 5. We got a lot of orders right here, which what we would call, I call this resting liquidity. We can call it a liquidity pool for now. So we have a liquidity pool right here. Okay, we have a liquidity pool right here. How do we know it's a liquidity pool? Because of all of this movement right here, all of this manipulation. Price isn't going up, down, whatever. It's just creating 1, 2, 3, 4 multiple touches. This is how we know there it's money there, it's liquidity there. Means there's orders there, it's buy orders there, and price is going to manipulate and then go down and take those orders out. Now we're not gonna get manipulated because we're gonna wait for price to come into a high time fair value gap, reject it more than one time, and then we're gonna jump in. So what did price do here? Price came into that. Wait a second, where's my? No, don't. Oh, oh my God, it's very little bit. Okay, sorry guys. Back into it. So back into it. I'm gonna show you guys the text above there as well. So back into it. I'm sorry. As we can see, London, when New York came in, price just pushed down here. Okay, now back to it. What happened? We were waiting for price to come into this high time fair value gap, and then what? Give us an inversion. So what do we need here for price to be a setup? Okay, very easy. Bearish momentum, right? Bearish momentum, check. Price is going down. Okay. 2, is there any fair value gaps or displacing candles? Fair value gaps or displacing candle, DP. I don't know if we should call it that, but anyways. Bearish momentum, fair value gap, or DP. Yep, we do have a fair value gap right here. We have this high time displacing candle / fair value gap. Okay, check. 2, did price come back into the fair value gap during New York, London, during those important hours, right? Yes, it did. Did price, let's just do this. Is the time correct? Is the time correct. Sort of, yes. It should be in New York, somewhere between London Open, New York Open, or somewhere here in between New York and London Open, which is fine. 10:30 is fine, 11 is fine. This is New York time I'm looking at right now, guys. So, okay, is the time correct? Yes. Did we have multiple rejections? Did we have multiple rejections? Yes, we did. We had multiple rejections. We can zoom in on the 3 minute and I'll show you guys. We had multiple rejections. 1, 2, 3. Price did not want to go up. Okay, now let's go back to 5 minutes. It's good. 5 minutes good. Now, did we see an iFVG after price came into the fair value gap? Did we see an iFVG? Okay. Yes, we did. Let's look at the 5 minute right here. It's a little bit choppy, but it's still an iFVG right here. When price closed right here, we would have waited for price to close. We could have then taken our short right here, put our stop loss above this high, okay, and then looked for the liquidity pool, and that's a 3R. Simple 3R. Very simple 3R. Okay, so before I continue here, now I'm going to show you the reversal, a setup reversal, but there is a few more tweaks into this, which I'm not going to 100% give away, but I just might do it, but we'll see. But of course, there's like there's like 2 or 3 more things that are extremely important to understand here, which I will give out to only to my own students, but I'm giving away a lot for free right now. So this is good stuff. Like you can become profitable just by understanding this here right here. Like most people will fucking take $5,000, $6,000, $3,000, $8,000 to teach you the shit I'm teaching on my fucking YouTube for free, dumbass. Oh my god, you guys are so dumb. Anyways, let's go. No, I'm joking. You guys are dumb. I'm just being an asshole. That's my trademark. No, let's go. Okay. Fucking dogs barking. There's a lot of dogs here in Marbella. Okay, so reversal next day. Why? How did I know price was gonna reverse? Why did I take the gold trades up? How did I know? Okay, so let's look into how I knew and why. Now we have again multiple touches here, right? We would say, okay, but this is a liquidity pool. This is another liquidity pool, right? Or just resting orders, whatever you want to call it. I call it let's say resting orders, or this is a liquidity pool, so I don't confuse you guys for the video. So we got another liquidity pool, which means there's a lot of orders here. How do I know that? Price is manipulating 1, 2, 3, blah 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 blah. What do we see more? Price is still bearish, right? Now I'm gonna give you my secret fucking sauce for how to spot reversals. Actually, I don't want to give it away, so I'm not gonna give away that one, okay? So, anyways, what do we see here? We see that price got swept, right? How do we know that? How do we know price got swept? Okay? How do we know price got swept? Because it was a liquidity pool. Here we didn't see any liquidity grab or price getting swept, but here we did. And as soon as it did, price went up pretty strong. Okay, now second confluence to me knowing that this is a reversal. What is the second confluence to me? Absolutely for sure, knowing that this is a reversal. Well, remember what I said about, am I getting the whole screen? Yeah. remember what I said about waiting for this? So here I would have waited for price to come into this what? Into this displacing candle or this fair value gap. So higher time frame displacing candle, right? If I see price disrespect the higher time frame displacing candle, now I know that we are going to be having what? Probably, most likely, a reversal. Why? We've had the sweep in the okay, chill out. We've had the sweep, right? We've had the sweep happen already, right? Hopefully I'm getting that again. Am I getting all this? Yeah, yeah. So as soon as price broke this, I know that, okay, price is not interested in being here to create an inversion like it did here, just like it did here. You see this inversion? You can see it on the 15-minute as well. This could also be counted as the inversion. So a higher time frame displacing candle. Okay. So now what is the second obvious thing that I know it's going to be a reversal? Price have been swept, liquidity pools have been swept, higher time frame displacing candle or fair value gap has been punctured above. Okay. Now let me take away this. Now this was a zone of rejections, but also it is now what? Equal highs. And what does equal highs mean, guys? If you're my students, you know what equal high means. It means just like this, it's a liquidity pool. There's orders here, there's orders here, there's sell orders here. Okay? So now that there's two equal highs, we have swept the liquidity pool, we have disrespected the higher time frame displacing candle, and now we also created another fair value gap right here, which is combined with this, and it's the price is respecting right here. And I don't know if you guys know, this is a breaker block. I don't want to go into what a breaker block is right now, but let's just keep it to the fair value gap. Now price has created a fair value gap. It hasn't only created a fair value gap, it has now respected the fair value gap, touched it one time, two times, three times. Have the fair value gap been touched multiple times, paused, and been rejected? Yes. And inside of that fair value gap, what do we see? We see this form. Now, you could count this as the inversion. You can count this as the inversion. Depends on who you are and how you trade. But me personally, I knew as soon as price went above here, I knew it would go up. So boom, another three, and we are done. If you guys are actually following me on this video, I'm giving out so much crazy information. You guys don't appreciate me enough. So let's just go through it one more time. High time, fair value gap, right? Oh my God. High time, fair value gap. Okay. Liquidity pool, rejection into fair value gap or displacing candle. Inversion happens in the right time. Short it, get money, win. Two, reversal incoming, another liquidity pool, but this time it gets swept. It doesn't only get swept, it creates a fair value gap while it's going up, and it disrespects the high time frame displacing